Do you know the 2 secrets that can transform your relationship with money forever? Are you aware of the psychological tricks that could be the key to unlocking your financial potential? Welcome to Amicable Finance, where today we're revealing 18 lessons about money, the psychology of money that could change your life. If you're ready to challenge everything you thought you knew about wealth, hit that like button, subscribe for groundbreaking insights, and let's dive into a world where money isn't just currency, but a pathway to unimaginable success. Money mindset. Your mindset shapes your financial destiny. It's like gardening. Plant seeds of abundance, not scarcity. Studies show that those who focus on long-term goals rather than immediate rewards tend to achieve greater financial success. Think of money as a tool to achieve your dreams, not just a means to an end. How do you view money in your life? Emotional spending. Emotional spending is often a response to stress, boredom, or instant gratification desires. A survey by NerdWallet found that 49% of Americans shop impulsively to deal with stress. The key is mindfulness. Pause and ask, do I need this, or is it just a momentary desire? Share your strategies for overcoming emotional spending in the comments. Budgeting. Budgeting is your financial blueprint. It's about making your money work effectively for you. A Gallup poll revealed only 32% of Americans maintain a household budget, yet those who do are better at avoiding debt and saving for the future. Start by tracking your income and expenses. What's your approach to budgeting? Emergency fund. An emergency fund is essential for financial stability. Unexpected events like job loss or medical emergencies can happen. Experts recommend saving 3 to 6 months' worth of expenses. This fund acts as a buffer, giving you peace of mind. How are you building your emergency fund? Investing over saving. While saving is safe, investing can significantly increase your wealth. The average savings account yields less than 1% interest, while the stock market has historically returned about 7% after inflation. Start with low-risk investments and gradually diversify. What's your first step towards investing? Compound interest. Albert Einstein called compound interest the 8th wonder of the world. It's your money making money. For example, if you invest $1,000 at an annual 5% interest rate, in 20 years, you'll have over $2,600 without adding another cent. Imagine what regular contributions can do. Have you started benefiting from compound interest? Financial education. Knowledge is power, especially with money. The more you learn, the better your financial decisions. A study by the National Endowment for Financial Education found that those who are financially literate are more likely to save, invest, and manage debt wisely. What's your go-to resource for financial learning? Diversification. Diversification reduces risk. Don't rely on a single investment. Spread your money across stocks, bonds, real estate, and more. This way, if one sector dips, the others can balance it out. A well-diversified portfolio can weather market fluctuations better. How diverse is your investment portfolio? Avoiding debt. High-interest debt, like credit card debt, can quickly spiral out of control. The average credit card interest rate is around 16%. Paying off these debts should be a priority. Consider strategies like debt snowball or avalanche methods. What's your plan to stay debt-free? Patience in investing. Investing is a long-term game. Market fluctuations are normal, but over time, investments generally grow. The key is to remain patient and avoid knee-jerk reactions to short-term market movements. How do you stay calm and focused on your long-term investment goals? Financial goals. Setting clear financial goals gives you a target to aim for. Whether it's retirement, buying a house, or traveling the world, having specific goals can motivate you to save and invest wisely. Start by defining your goals and creating a plan to achieve them. What are your financial aspirations? Money and happiness. Money can buy happiness to a certain extent. It can improve your quality of life, reduce stress, and provide security. However, beyond meeting basic needs and a few luxuries, happiness depends more on relationships, health, and fulfilling work. How do you balance pursuing wealth with other aspects of happiness? Avoiding lifestyle inflation. Lifestyle inflation occurs when your spending increases as your income grows. It's tempting to upgrade your lifestyle with every raise, but this can hinder wealth accumulation. Living below your means allows you to save and invest more. Have you experienced lifestyle inflation, and how do you manage it? Financial independence. Financial independence means having enough wealth to live without working. Achieving this requires saving a significant portion of your income and investing wisely. It's about freedom and choice. What steps are you taking towards financial independence? Money and relationships. Money is a common cause of stress in relationships. Open communication about finances is key. Discussing goals, spending habits, and financial responsibilities can strengthen your relationship. How do you and your partner manage finances together? The value of time. Time is a non-renewable resource. Prioritize how you spend your time, just like you do with your money. Focus on activities that bring you joy, growth, and fulfillment. Remember, time well spent is more valuable than money earned. How do you ensure your time is well spent? Giving back. Giving back can be incredibly rewarding. Whether it's donating to charity, volunteering, or helping a friend in need, sharing your wealth can enrich your life. Studies show that giving can boost happiness and health. How do you give back to your community or causes you care about? Continuous improvement. Your financial journey is ongoing. Regularly review and adjust your budget, investments, and goals. Stay informed and adapt to changes in your life and the economy. Continuous improvement is key to maintaining and growing your wealth. What's one financial habit you're working to improve? And there you have it, 18 powerful lessons about the psychology of money. Remember, your journey to financial wisdom is unique. Keep learning, keep growing, and share your experiences with us in the comments below. Don't forget to like, share, and subscribe for more content like this. Until next time, stay financially savvy.